What the heck are we seeing in the small business acquisition space specific to SBA financing? So right now there's a ton of biz acts happening, right? A lot of the deals that I'm seeing, they don't cash flow, meaning if we were to finance 90% of total project costs, the DSCR would not work. So what we're seeing a lot of in this market, a lot more than normal, is we're seeing now that they changed the standby rules, we're negotiating with the sellers and they're taking back a big seller carry second on full standby. That means that they can't get payments on that seller carry for 2 years. We're seeing a lot of that right now because then for underwriting purposes, we're taking out that $200,000 or $300,000 seller second out of the DSCR equation, and it's making these deals pencil out. So we're seeing a lot of that right now. I got several deals in the hopper that are all structured in that way. The buyers want to buy. I think they may pay a slight premium for the fact that most of these sellers, there's a lot of add backs. It's really hard to justify the cash flow. The buyers feel like the cash flow is there. A lot of small business owners, they run a lot of one-time expenses through the business that may not actually be business expenses. So oftentimes they pay themselves a salary, which may or may not be there. These are all add backs, and sometimes you can't justify adding these things back in, but the buyers know the real potential. And so that's why they're willing to pay a little bit of a premium based upon DSCR from an SBA standpoint. So that's why, to make these deals work, seller carry full standby, a bigger chunk of the pie, making the deal work, right? So for example, I have a deal right now, it's like $1.2 million purchase. Seller's going to carry back around $280,000 on full standby to make the deal work. So that's what we're seeing a lot in the biz act space. Sellers are willing to do the carry. Obviously, the other thing that's impeding this all is interest rates on these loans. If it's a biz act, no real estate, it's a 10-year amortization, right? So most of these loans are not fixed rate. So it's Wall Street Journal Prime plus 2 or 2.5 or 2.75, depends on how hairy the deal is. So you can have rates in the 11% range. And so that's also making it challenging. And that's also why we're getting a lot of seller carry on these. It's also a fantastic time to be a buyer to structure utilizing SBA financing because you can get them to carry back on full standby a portion of the equity injection. Typically, we got one, for example, that we're structuring 2.5% buyer equity injection, 7.5% full standby. And so essentially you can go and buy this existing business with $25,000 out of pocket, right? He's coming in with 2.5% of total project cost. So it's an amazing time to be structuring these biz act opportunities. Happy to help on anything SBA financing, commercial lending. If you're interested in buying a business or a franchise, happy to connect on our buying process. Thanks for watching another episode of the Investor Financing Podcast. Please like and subscribe, and I'll see you on the next show.
Meet Bo Eckstein, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.